Hello, everybody, and thanks for joining us for this special Monday episode of Trade the Chain. I'm joined by my co-host, Ryan Gorman. We got our market rebels from marketrebellion.com, our crypto analyst, CJ and Monty. And we have our, of course, recurring special guest, Rob from Digital Asset News. Always a pleasure. And thanks, guys, for joining. Mid-afternoon. It's November 30th, and we did something really, really great today. Bitcoin hit its all-time high.
Yeah.
If any of you guys watching out there like us, we've been waiting 3 long years for this. Ryan actually made all his money back from when he bought it 19,000 3 years ago.
Finally.
Rob, he bought a yellow Lamborghini after buying Bitcoin at 4,000 2 years ago. So everybody's happy. He has 2 Lamborghinis. But I mean, this is like an awesome, tremendous day. And thank you for joining us. And we're going to get our shameless plugs out of the way. So stand by.
This episode is brought to you by Trade the Chain, a community of online crypto traders that provides sentiment analysis, social media analysis, and unearths trading signals from a sea of noise. TradeTheChain.com. Check it out.
And then our next plug we have is Market Rebellion. We're now live. We have a bunch of different services that go into this particular product. The first is Trade Insights on a weekly basis, about 2 to 3 trades that we publish ourselves. And then we also have a macro portfolio for the course of the bull market that we have. So you can sign up today for just $1 and check out some of those allocations, as well as come check out our charting platform and kind of our community where you can interact with the community and ask us questions right here, and we will respond just about 24/7. So yeah, you can sign up for only $1, and that's at marketrebellion.com. Just go in the crypto section up here on the right. But without further ado, all eyes for BTC.
It's all BTC today, and there's this article in CNN, just pointing to the all-time high, and this is all Ryan's doing right here, so I'm going to let Ryan take it away.
Yeah, so CNN covering Bitcoin's all-time high just shows how big of a story this is, right? I mean, CNN doesn't often cover cryptocurrencies in the same breathless manner that, say, a CoinDesk or even a Forbes or other outlets like Bloomberg do, or at least nearly as often. When they roll out the crypto coverage, it tends to be a huge story. And today we had just that. We hit what, 19,850 or 860, give or take, depending on where you're trading Bitcoin. That's an all-time high, no matter how you look at it. And them dedicating an entire column to that shows the immense implications of this story, right, Rob?
Yeah, I think it's very big. I mean, the whole thing is that people don't care about Bitcoin or cryptocurrency until it actually, hits some all-time high or some fantastic thing, and that's when everybody's going to FOMO in. The problem with that is when they get in, then the price may go up a little bit and it'll crash back down because people aren't used to the volatility, and that's the problem with CNN covering the story. It's great for the press overall, but then when people come in, they're like, "Wait, I just lost $1,000," and they just don't get it. So money isn't made right here. Money's made when Bitcoin and crypto is super boring and nothing's really going on, and you actually get to invest and do these types of things. Right now, they're going to cover it. People are going to come in and they're going to come out and like, "Oh, this is totally a scam. This is a problem." That's how I see it. I always think these stories are kind of dangerous. It's the same thing when they did it, 3-4 years ago. So that's just how I see it.
I mean, I guess you could make that point, but there's also the thought that this rally is, it's a bit different than the previous rallies because you have institutional money. You have the likes of a PayPal and a Cash App giving access to hundreds of millions of people that didn't otherwise have access. Sure, there's a bit of a FOMO trade going on here, but when you have Main Street and Wall Street piling in, I mean, even Guggenheim Partners, that announcement over the weekend that they're going into GBTC, that has to provide some basis for a floor here that didn't exist back in 2017, no?
Yeah, it's much different. I think the people that really will make out are not just the investors, but the traders, like the gentleman we have on today.
Indeed. So let's get to
all about it.
Let's get to the charts.
Yeah, I'll be honest, just in my personal trading and investing, the most profitable I have been is from long-term holding. When it comes to the crypto market specifically, the options market is a bit different. But talking about Bitcoin specifically here, we topped kind of after reaching this green 9. We went on for a little bit more, but you can see that was the signal that the trend was really exhausted. Now we pulled back. That was a low of probably like just under 17,000 that we pulled back to. Personally, I thought we were going to go a little bit more because of how fast we had gone up. But if I am in a short here, let's just say hypothetically, if I'm trading this on the sequential indicator, if I am in a short on this red 1, and then we start climbing back up with bullish price action, as soon as we get the price flip to the green 1, I no longer want to be short. And the same goes for a bullish position. If we have a price flip to a red 1, that's, I don't, stop losses, at least for me, are not always concrete in the sense that they're not always at the same place. So I might just exit a trade in case we just undergo this price flip. So from this perspective, the fact that we've undergone a bullish price flip and broken above the previous swing high and all-time high is very bullish in the short term for me. And I'm looking for a green 2 candle to possibly break 20K tomorrow. We'll see what happens. But we're bullish on the daily time frame. The one thing I want to say before I pass it off here is that the one thing that concerns me is that we reached a 9 on the weekly chart last week. Today has been the first candle, or Sunday rather, has been the first candle of our new week. And you can see here, we still have 6 days of this week left. So typically when we hit these 9s on longer term timeframes, they tend to be more influential and characteristic of reversals. So like, there's just so much to unpack here because we only went down like 15, 20%, whereas typically we go down 30% or even 35%. And we're still on this 9 on the weekly. So it really concerns me from a bullish perspective. But I don't want to go on too long about that. I want to pass things to Monty.
Yeah, no, I'm in total agreement with you. And it's been really kind of fun to watch. And this has been, I kind of want to touch back on what Ryan and Rob were talking about, how CNN covering Bitcoin kind of results in this unprecedented volatility that we're not used to. But I think Ryan makes a great point that this is kind of a different bull run. And I think those institutions and that large money is kind of the backbone or like the meat and potatoes of this bull run. And then you have all the kind of institutional traders themselves that are sort of following those institutions. We had people like Raoul Pal tweeting that he was getting out of gold and going into Bitcoin this morning. So I think that all the people that are coming from traditional equities and are following people like Raoul Pal, I think Rob's exactly right. They're not used to this volatility. And like CJ and I, our boss, Dirk, when Bitcoin started dipping a few days ago, he texted us. He's like, is the government putting regulations on Bitcoin? Is it going down to 2K? We're like, no, relax. There's still plenty of institutional money that is betting that this is going to be successful in the long term. And I think we just saw some of the kind of fickle retail traders get weeded out. And yeah, I expect this bull run to continue very strong.
I mean, the evolution, though, of more sophisticated instruments like derivatives, options and futures, don't they kind of also put in more of a price floor than existed back in 2017? Because you have that ability to hedge that didn't really exist through sophisticated investors back in 2017. No?
Yeah, that's a good point, Ryan. I mean, options, people think they are more risky, but at the end of the day, they were created as an instrument to be able to hedge macro positions. Mm-hmm. So the more instruments like options and derivatives, the more accessible and easier to trade they become for traders like myself, the more people I believe are going to be entering the space. Because at the end of the day, the only thing traders need to be profitable is volatility. Without volatility, traders will die. So they will go wherever that volatility is. And if it is in crypto for a short period of time, and we have vehicles such as that derivatives or options market, then it's all the better.
Well, I have a question for Rob, and this goes back to Monty mentioning an article just a couple seconds ago. Rob, would you take all your gold holdings, every single one, and convert them into Bitcoin right now?
So this is a tweet actually from what we were just talking about. Raoul Pal, he said he's going to convert all his gold into Bitcoin, right? And I tweeted out something like, finally Raul's going to get rid of that useless gold. While he's at it, he can probably throw away his Blockbuster card and his MySpace account. And then someone had actually tweeted that out and said, hey, but don't you own gold? Are you gonna do the same thing? Get rid of it. I said, in all honesty, it was just a funny tweet, but really you have to hold some type of gold. And I own gold and silver and Bitcoin. And you never know what's going to happen in the future. So you really have to really hedge your bet and be a little bit more responsible. You can go all in, and this might be the greatest time to do that. I'm not going to say it is or it isn't, but just to be a little bit more safer, I would Raul can do whatever he wants. He's got a little bit more gold than I do. But if you do a 90-10 split or an 80-20 split, you can't go wrong that way.
I got to tell you, ever since what happened in March with the U.S. equity markets and crypto markets as well, I put in a decent sized position of gold. First, I bought the equity dip and the crypto dip, but then I put in a very nice position of gold, and it is hedged very well against the ups and downs, right? So, if I have the equity markets going down, I have my gold rising, same with Bitcoin and everything else. It's almost taken the fear of panic out of me every time I look at the portfolio on the long position. So I do agree. I wouldn't take gold out of your portfolio at the moment. Not advising that in any way, but it does have its place, its time and place. I don't expect to make money off of gold. I just expect it to ease my worries of my positions.
Totally agree.
Oh, here we go. We got a nice little gold chart.
Number 9. So if I had gold, if I was Raul, I would wait a few days to sell it. But
well, what do we? To what Ryan said, we had Guggenheim mentioned news. We had Alliance Bernstein, I believe, that was today, right, Ryan? And so now we have all these big players talking about Bitcoin because it's back to the old adage. Nobody likes Bitcoin at 8,000, but they love it at 18,000. But back to what Rob was saying with FOMO. Are we at the height of FOMO right now, or are we still just getting into the entry point of FOMO? And Rob, if you had retail investors right now, what would your sound non-financial advice be as they look to you for guidance?
Be careful. Be careful. Everybody tells me the same thing, and there is validity to what people say about. This time is different because the institutional players, everything goes that way. However, there's one thing that never changes, and that is that feeling, no matter how long you've been in this industry or how long you've been into the financial services, you're always going to have this feeling of FOMO. I have to get in now because there's something that is pulling me into this direction. And people will make bad decisions because emotions screw up everything. And like I said, it doesn't matter who you are, you're still going to have this FOMO. And then the unknowns, like what Monty was just talking about with his boss, you're like, well, I don't know what's going to go on. So maybe I should just, put a little bit more than I really should. And before you know it, you're over yourself. So I always talk about in my channel is like, look, you can do whatever you want to. You can trade away, you can do leverage trading, whatever gambling you want to do is fine. However, I'm just going to tell you right now, you can dollar cost average, you can be an investor, and usually you're going to make yourself, it's going to lead way to a better opportunity later on. And the ones that come to me and said, hey, I wish I would have listened to you. I'm like, well, it is what it is.
Sorry, Rob. There's always going to be FOMO though. There's a penny stock today that's up 92%. And my friends are talking about it on WhatsApp, like they were talking about Bitcoin last week. So there's always going to be FOMO no matter what asset class you're looking at. And you just have to, as Rob says, be careful and make what you think is the most educated decision that's best for your risk tolerance. And I just don't think we're quite at the FOMO stage with Bitcoin. There's just, we're still so early in the adoption curve. I keep saying that every week, but we are. If you think about the whole universe of people that have access to Bitcoin and the number of people who actually have purchased it and the number of wallets that exist, we're probably not ever going to get to 100% saturation. It's not a mobile phone, but even if we got to 10 or 15% of that total universe, people with wallets, I think it would make such a huge difference in the value of Bitcoin that, we're still early days, even if we retract a bit after this high today.
I saw that, sorry, just to interrupt, I saw I think FOMO will really hit new highs when PayPal starts to push the issue. I was just perusing through Twitter and I saw an ad come up for PayPal saying, have you learned about Bitcoin? Do you know what it's all about? Find out at paypal.com and da-da-da. And then once people start to get in that, because everybody has PayPal. And then once it starts to go through not just PayPal, but through Venmo, through Zelle and everything else. I mean, well, not Zelle, probably Venmo. I think it'll be even more so. But right now, I don't see it as what it was in 2017, but it's getting there.
Yeah, and going back to any sort of retracement, CJ and Monty, do you guys have any sense of if there will be a retracement in the short-term outlook for Bitcoin, or are we just doing a little steady sideways climb?
Well, CJ pointed out, I mean, we're on that weekly 9 candle, so I'm expecting volatility, but because of the fact that we had a correction earlier in the week, I don't necessarily think that correction is going to be anytime soon. And I agree that we're kind of, I mean, Ryan's definitely right that we're in the early stages of adoption, but I don't feel like the FOMO is really there yet. Not only is the adoption rate not that high, but also like just the overall market cap of Bitcoin itself. It's such a novel asset when you compare it to something like gold. So for me, I don't think the big drawback that everyone is expecting is going to happen anytime soon. I think Bitcoin has a lot more room to run before it actually hits like a real plateau, and then we start seeing some real volatility. And I think that is when people are going to start experiencing the FOMO. We're going to have huge drops and huge gains in price in 24-hour windows, and we're not there yet. This is fun volatility, but for Bitcoin, this really isn't that much.
And you made a point a few episodes back about how we were asked in our community room that, like, we talk about Bitcoin throughout these uptrends having 4 or 5, drawdowns of 30, 35%. And, we wondered, are those drawdowns going to be less because the primary driving force of this bull market has been through institutions who are buying and holding for the long term? So does that equate to maybe only 20 to 15% pullbacks as opposed to, the typical historic 30% pullback that we've gotten? I don't know yet. I can't fully answer this question. This 9 on the weekly still scares the hell out of me. But we're going up, and for right now, it's going to assume that.
All right. Well, cool. Guys, again, thanks for the last minute attending of this. Obviously, it's been an interesting day. I mean, everybody's text messaging and emails are probably going wild. And we'll see what happens. I mean, any one last prediction of, do we close December 31st on top of the all-time high that we've now made, or are we still in the sideways region below it?
I'm going to say we close above it.
Okay.
I'm going to say sideways and below. Let's see.
Ryan?
I'm sticking with the number I've been, the same drum I've been beating all year, 15.5.
Rob, what's the lucky number?
By the end of this year, December
31st, do we close above our all-time high or sideways and below?
I'm just going to go for the cop-out answer. I'm going to say it's going to be 19.8, 19.5. That's it. I have no idea.
All right, guys, stay tuned. We'll see you guys for Friday's episode. Thanks for joining us today, everybody.
Thank you.
Bye, everyone.